The U.S. Federal Reserve lowered interest rates by 0.25 percentage point Wednesday for the second time this year. Chair Jerome Powell said policymakers at the central bank were concerned about the weakening labor market.
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
The vote was 10-2 in favor of the cut, with Fed Governor Stephen Miron again calling for a deeper reduction in borrowing costs, and Kansas City Fed President Jeffrey Schmid favoring no cut at all, given ongoing inflation. Powell offered a note of caution about what happens next.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Stock markets pulled back on Powell's comments on the outlook for monetary policy, as traders and investors reduced existing bets favoring more rate cuts. Fed policymakers acknowledged the limits in their decision-making process posed by the government shutdown, which has meant no monthly jobs report among other surveys, though they did note that, quote, available indicators suggest the economy continued growing at a moderate pace.